are the global developments a big threat to Indian risk assets to your mind, or do you reckon that ceteris paribus, unless a very large accident happens, Indian markets will wait through better?
Yeah, so I mean, that's kind of a $1 million question, because we have seen that lately Indian equity markets have been showing kind of a divergence vis-a-vis what's happening globally. A kind of a decoupling where we have seen our markets do much better than not only the developed markets, but the other emerging markets, including China and some of the other markets. And that is, I mean, leading us to believe that whether really are we Indian markets would really remain decoupled from what's happening globally. So to look into that, I think clearly I think India economy is in a much better shape than what we are looking at globally, because a lot of the global economies, large economies, are seeing a big slowdown, or at least expected to see a slowdown in the next few quarters. In India, we are not really seeing any major slowdown. There could be a tad 50 basis point impact on the overall GDP growth because of the current interest rate environment and the slight tightening in liquidity situation. But beyond that, the underlying drivers of the Indian economy still look fairly strong. And our economy, while there are exports, but it's not so much dependent on the external. It's more inward domestic growth which will drive our economic growth, including investments, okay, which are picking up after a long time. We've seen some pickup in private sector capex. The domestic real estate sector is doing reasonably well. Consumption, consumer discretionary, including auto, is slowly picking up. So I think that should be fine. Other factors like the liquidity and other money flow, I think the domestic inflows into the market still continue to remain very strong. So any kind of a sell-off, what we've seen from foreign investors on the back of global risk-off is getting balanced to a large extent by domestic flows. And that I don't see it really turning around materially or going down materially. The steady inflow into our markets because of SIP, that is healthy, and I don't see any major impact on that. So on the flow side also, I think the domestic flow should remain fairly decent, and that should protect the market. While I think there will be some impact because with global growth slowing down and global money moving from risk assets into say other defensives or fixed income down the line. I think there will be some outflows, and you will see some correction, but I think it will not be as large as what we've seen in the global markets. And I would like to believe that the bottom, what we touched in our markets in the month of May, June, I think that should hold on. Whereas we've seen global markets have already broken those levels.